All right, so there are two paths to this. One is what happened with the Paytm IPO, and is it a warning sign for other companies in this space that are hoping to hit the primary markets? Remember all of that excitement over new tech IPOs and startup IPOs. Have we seen a pause to that? The second part of this is, have we entered a consolidation phase in the markets, or will this blow over? Is that bull run which saw no stopping at all, is it finally coming to a pause? Now, to speak on some of these issues, I'm joined today by Ashneer Grover, co-founder and managing director of BharatPe, Nikhil Kamath, co-founder and CIO of Zerodha, with us on the show today. Ajay Bagga, market expert, is joining us, as is Ganesh, promoter Bigbasket, Portea, and many more. Welcome to all of you. Great to have you this evening on the India Development Debate. Ashneer, let me begin with your take on what the lessons are from the Paytm IPO. Clearly, it was a much anticipated one, the biggest so far in India. Was it just a problem of the wrong pricing?
Yeah. No, I think I would call the Paytm IPO a gun to your head IPO, right? So basically, without figuring out what's the demand in the market, you've had in your head a number already saying my last round 2 years back was a $16-17 billion round. So if I have to do an IPO, it should be 30%, 40% higher from there. But to support those kind of valuation numbers, you just didn't have the numbers on the operating side. So essentially for the last 3 years, you've been a stagnant business. So in any business, you need at least two of the three. You need scale, you need growth, or you need profitability. At least two out of the three has to be there. Now, only with scale, with no growth, no profitability, if you go into the market and you want premium pricing, the market is just not willing to give that pricing to you. So it's absolutely mispricing. And I don't think the management can put the blame on anyone, right? You had one of the most celebrated investment bankers as your CFO, right? If he doesn't know how to price, then no one knows how to price the IPO. So to me, it's just not listening to the market, people warning you, telling you there's no demand, and just going out with the number you have in your head rather than the number which is book built.
Yeah, but Ashneer, is it as simple as that? Because you're right, within the team, perhaps there were high ambitions, but there were big investment banking names attached with this IPO. There was a whole process it went through, and it did get fully subscribed and a little over in the retail segment. So is it also just a matter of timing? Because a lot of very astonishing IPOs have come into the market recently. They've also done well. Profitability, the question of profitability took a back seat. So was it just as simple as this in Paytm's case?
See, I've been a banker myself. I have done a few IPOs, and I can tell you, greed takes over everyone, right? So even if you're an investment banker, you're going to make a 300 crore fees out of it. You've told the management, sir, there's no demand, please price it lower. They're not willing to listen, right? You can fill the book 2 times or maybe 1 time. What will you do? If you have the guts, you'll say, okay, I'm a banker, I'm going to step out, you do the IPO yourself. Or you just say, okay, I'm making 300 crore fees here, let me go ahead with it. And it's going to be on the company's head. I don't have anything to do or lose after this. And you go ahead with the IPO. I think it's classical what happened here. I'm sure the banks would have gone back to the management and told them, please price it 25% lower. Maybe we'll find some more demand. But they just went ahead with it. Look at the HNI section. If you look at NICA, the HNI section is going there 110 times. Your HNI section went for 0.24. Right? That was a clear indication in itself. There was no gray market premium at all. So there were all the signs there is no demand at the given price. And they just went ahead with it. And I'm sorry to say it, but the banks played ball, right? I think one major thing which was also wrong, you did an offer for sale for 10,000 crores. Right? Now, forget everything. If you were Paytm today and all the 18,000 crore would have come into the company, you would have said, okay, let it fall. I have enough money in the bank. I will ride it through, and in the next 2 years, I will show what I can build. But today, you don't even have that confidence because majority of your the issue went to your Chinese investors and they just cashed out. So multiple things went wrong here. High OFS portion was also to blame.
Yeah. Nikhil Kamath, you had a very interesting tweet on the 10th of this month where you said Nykaa lists at 1600 times price to earnings. They sell cosmetics online. Paytm next. Best thing for a value stock investor might be to go on a really long holiday right about now. Do you think it's time to extend that vacation?
Well, Tamanna, I might have been a bit more critical than I should have been. Markets are frothy today, be it in the private place, be it in the public space. I would argue that not just Paytm, but there is something to be said about everyone else who has listed in the last 1 year. Everybody from Zomato to Policy Bazaar to Car Trade to Nykaa, they all seem expensive. And to Ashneer's point, a lot of these have also been OFS. There have been earlier investors exiting onto the retail in the country. The rally we have witnessed in India in the last 18 months has been so stupendous that we are kind of jaded by our own past in a way. If I turn on the TV today and I hear what anchors are saying, people are talking like the world is ending, with a tiny 2-3 day correction. We often forget to realize how much we have rallied. Like even for the month of November, net we are down 1% or barely flat on mid cap indices and large cap indices. So nothing really has happened in the month of November. you know I've heard so much critique for Vijay Shekhar Sharma and Paytm in the news. I think something also has to be said about him as a person and as an entrepreneur. He's a guy from a small town who has come out and built this humongous enterprise. Maybe it's priced incorrectly. Maybe at a certain amount of correction, there is value in the company. But what I feel is at some level, there is value in the company. The pricing might have been wrong. The IPO might not have gone in the manner that it should have. But I think at some point these companies will become reasonably priced. Everything from Zomato, Nykaa, Paytm, all of them. And I think this correction in the market is good for the ecosystem. It's good for the retail of our country. I'm not talking about the people who got allotment in the IPO, of course, but I'm talking about people entering the equity markets from a longer term perspective. I think there's some amount of rationality coming into the entire ecosystem, and I think that's a good thing.
Yeah. So, Nikhil, you're the constant contrarian. The last time we spoke, when markets seemed unstoppable, you warned about the froth. And today you're saying it's not the end of the world. So, do you think we're in a consolidation phase, or this is just a little pause?
I hope we are, not just for India's sake, but across the world. I think global markets have rallied ahead of fundamentals everywhere in the world. There are plenty of intrinsic fundamental issues at hand, not just to do with the money printing and inflation and excesses in different pockets of society. I think a correction in the market is probably healthy for the market from a long-term perspective. If I were to call the next 5 years of stock markets, I'd rather have the markets correct 10-20% now and then rally and run in those cycles versus a one-way rally. And if the correction happens after too much of a one-way rally, I think the damage is a lot more than when you have cyclical markets.
Yeah. Let me bring in Ajay Bagga and Ganesh into the discussion. Ajay, let me come to you first on the broader market. So a lot of factors being talked about today. I mentioned some of them on top of the discussion. The RIL Aramco deal going sour, resurgence of coronavirus in parts of Europe, the farm laws repeal. Do you think that some of these factors will fade away and we will see a recovery, or is sort of reality dawning that the valuations are too high and the party may be over?
Very difficult to say, Tamanna. We'll know only later when the party got over. all of us are playing musical chairs and staying near the exit. We all think we will be able to dance our way through the night and exit before the last fool. That doesn't happen. But if you ask me, my guess is it's not. It's still a bull market. All the issues of today could have been, taken into their stride by the markets. But it was a heavy market waiting for finding some cause, and it found a cause. November 8th, 2016, Tamanna, we were doing a show at 8 p.m. It was on the Trump inauguration and Trump's impact on the Indian markets. And all of a sudden, we heard the Prime Minister is going to come live and say something. That was a great moment for Paytm and all these fintechs in terms of digitalization. And they brought their IPO around that. Whatever the reasons, whatever the valuations is something, a lot of people can differ on. But the reality is it has delivered a lot of losses and it's broken some sentiment. Is it going to be a sentiment breaker for long? Is it a Reliance Power moment? Is it a 92 moment? I don't think so. That kind of margin pressure is not there in the markets. Positions are not so skewed. B, the liquidity is very strong globally. C, the foreigners have been selling in India for quite some time, but it's getting absorbed. Even if you look at the November data, 13,000 crores sales by foreigners without counting the IPO inflows. And the domestics are about 11,000 in front of that. 10,000 crores of SIPs coming in month after month, lending some amount of stability to the markets. November to February, normally seasonally the best time in the secondary markets. Budget coming up, political capital lost, and a lot of makeup having to be done on both on inflation as well as giving relief to some sectors and the infrastructure. So definitely, I would say with foot in the mouth being a big risk in saying it, I think it's a minor correction. You have the oil prices going down. Friday, you had the People's Bank of China saying we need more fiscal and monetary stimulus. That itself normally moves the markets. Just now, Biden has said Powell continues for another term. U.S. markets made their 66th record high for the year. So I think we ignored all that. These issues, Europe is a well-known issue. COVID numbers are a well-known issue. Everything gets discounted. Heavy markets needed a catalyst. It happened today. Will it happen again tomorrow? I think lesser probability. I would vote for the bull market continuing.
Okay, so let's come back then to, why are we harping on the Paytm IPO? And the attempt here is not to diss or beat down on the Paytm story. It's a great story on Vijay Shekhar Sharma's efforts and achievements. It's also to understand what we have been seeing in the last 12 months and are going to continue to see. So, okay, Ganesh, with that, let me come to you. On this whole trend and excitement about newer kind of companies finally hitting IPOs and giving retail investors the option to participate. At least that was the hope. Here, there are fears that it may be the reverse, that initial investors may be taking off money from the table at the expense of retail investors. Do you think this will have a sort of a chilling effect on other IPOs in the pipeline?
No, absolutely not. I'm also slightly amused by so much of hullabaloo taking place on Paytm and the dissing that's happening. We are living in exciting times, to say the least. The stock markets have scaled Himalayan heights. Unicorns are born seemingly on a daily basis. The world is awash with cash. Trillions of dollars have been printed during the COVID epidemic. All the cash has to end up somewhere. It goes to the riskiest corners, startups, crypto, equity markets. China's crackdown on tech and increasing focus on the domestic market has led to a lot of liquidity washing up on Indian stores. No wonder Nifty keeps new highs. No wonder all the startups aim to become unicorns. It's no wonder private companies are rushing to go public. I mean, obviously it's cyclical. Sometime it has to stop, it will correct, it will go back. Zomato started the tech IPO party with Nykaa zooming straight out of the gates. Investors were sure that every tech IPO would do well, post double-digit gains on first day itself. Valuation did not seem to matter. The companies were going public at 3 to 4 times their last round valuation. So all of this happened. So correction is perfectly fine. There is nothing wrong. Point number one. Two, I think we are alluding too much to what happened between the investment banker and the management, what they told Vijay Shekhar Sharma, what Vijay Shekhar Sharma told. All that are complete conjecture of armchair people sitting here. I mean, none of it is true. Pricing of shares of an IPO is a tricky proposition. If you price it low, you seem to be shortchanging the existing investors, leaving money on the table. You price it high, you leave less for the new incoming investor. It's a very tricky thing. Why it has been priced so? Obviously, now it seems it was priced very high. But full kudos not to attach anything wrong aspersions to iBanker or the management saying that they wanted to do it. Now, it's completely wrong to say if the large portion is offer for sale, if existing investors are selling, something is wrong. They are cashing out and all that stuff. Please understand, the early stage investor is an early stage investor. Their fund life is over. Even if you price it at 1/10 the price, they are not going to invest. They are going to sell because IPO is one of the ways for them to exit. It has no signaling effect at all. And it's being upfront said that they are selling. If the business model does not need more cash, don't take cash. Offer 100% offer for sale. It's perfectly fine. It shows the strength of the business model. Therefore, to rate a management or the issue and saying, oh my God, the investor is selling. I'll give you a simple analogy. It's like a guy who runs a nursery who sells the saplings to his customers. Do you tell that guy saying that, why are you selling the sapling? If you're so bullish about the sapling, let it grow into a tree, make it into an orchard, get the fruit and sell the fruit. No, his model is to sell the sapling. There is no signaling there. Similarly, an early stage investor who has been there for 7 years, 8 years, 10 years doing that. And I see so much of chest beating going on for the anchor investor who came in 2 months back at 20% discount. Firstly, please don't cry. They are seasoned anchor investors who have invested in multiple IPOs, who for decades have got rich by making money and investing. If they are down on the opening day by 20%, they are not crying. Why are you crying and say greater fool theory, he has sold off, he has exited? I think all that is wrong. And trying to hold, personally, I see in social media, attacks on Vijay Shekhar Sharma.
Ashneer, you want to come in?
Attacks on Vijay Shekhar Sharma or attacks on people, that's completely...
We can't blame social media. Social media is a platform.
No, I'm not blaming social media.
We can't blame social media. Social media is a platform. Good things happen. Terrible
Don't
things
attack
happen.
the investor. Don't attack the founder or the investor.
No.
You don't have to actually...
Okay, can I just get Ashneer to come in? Can I just get Ashneer to come in? 1 minute. Ganesh, 1 second. Sure. You said your piece. Let me just get Ashneer to come in. Yeah,
I completely disagree to this. My point is, when Nykaa got listed, right? How many articles got written about Falguni becoming the youngest woman billionaire, right? When Zomato got listed, how many articles got written about Dipinder? They got celebrated, right? Because they gave returns. Now, if someone is not given a return, why can't you say that?
No, returns on one day is not the return, yeah?
No,
returns
so who's saying? No, here's the thing.
Just hold on.
The discussion is that, no.
Infosys listed down. Did you disagree?
Sir, listen to me.
One by one, guys. One by one.
No, let me just complete.
1 minute. 1 minute. One by one. Ashneer, finish your point and then K. Ganesh will respond. Yeah.
Sure. Who is saying VSS is a bad guy? I'm not saying that. I keep telling people if VSS had not built Paytm, I would not be able to build BharatPe. Right? There's no denying in that. What is the point being debated here? Whether the IPO was conducted fairly or in a manner it should have been conducted. I completely disagree that it was conducted in a manner it should have been conducted. You are a $20 billion company. You're the poster child. You have the best of people giving you advice. If you want to listen to them, you have seen 2 IPOs give 100% return. You are a consumer company. Everyone knows you have to maintain your brand even while going public. So can't you listen and price yourself a bit lower? And what is the hurry to give 10,000 crore rupees offer for sale? It's not I have not heard of a bigger offer for sale, at least in my life. in India. You tell me if there has been a bigger
Two
offer
more
for sale.
minutes. I'm just finishing it, I'll take two.
Okay. Let Ganesh, please respond. Let Ganesh respond.
I have full respect for BharatPe and for Ashneer and for everybody else. The point is very simple. Okay, right? The company, the management, the board, along with iBankers, take a decision to price. What the first 2 days has shown that the pricing has been high compared to retail market. Obviously, everybody would have been happy, including Jay Sharma, if the price had opened higher than the market. But please understand this. Every issue that gets priced does not open at high pop. The retail investor who is investing for IPO pop is investing because of general trend that there is a shortage of supply. Therefore, you will get under allotment, only a fraction will get allotted. And because only a fraction get allotted, there will be a pop. It is like when I was in Delhi in college days, we used to apply for DDA, Delhi Development Authority allotment. The other thing I used to apply for was Maruti car allotment. Why is that? You apply, hopefully you will get if you're lucky, you'll get allotment. If you get allotment, you'll get a big pop. I have sold 2 DDA allotments when it got allotted because I had no money to buy a DDA flat, but I applied anyway because you have to apply a small percentage. Now it is great. If it doesn't come, mostly the allotment will not come. That is what happening in the retail IPO opening day market. People are applying with the idea to sell. They're not based on fundamental. Now, trying to go on and on about how you should have listened, how you should have priced it is meaningless. Point number 1. 2, because it is the largest size IPO, the OFS also happens to be largest. Okay, firstly, I think this is a correction. I think we should not attach too much of importance to this. This is not going to affect the market. Future, there will be IPOs, tech IPOs that go have a pop on the first day. There definitely will be IPOs that are listed lower. There will be corrections that are taking place. It will happen.
Let's come down to the specific question. Let's come down to the specific question. I said at the start, this is not about attacking one company or its investor. We're trying to figure out what this means and what impact it will have. So let me come to Nikhil. On this. Do you think this will have an impact on upcoming IPOs? Will they get repriced? Will there be a concern in investors' mind that they don't want a redux of what happened with Paytm?
I think so. Markets at the end of the day are driven by sentiment. And at least in the short term, I think this will remain on people's memory. In the same manner that, Nykaa kind of helped the IPOs who were coming after Nykaa, this would kind of take away something from there. But I don't think it's a long-standing thing. Public memory is short. The next IPO which comes by, people will forget. And depending on how well the IPO is marketed or how big the opportunity is, I think they'll think about it afresh.
One I think takeaway from this, which everyone can agree to, what the market does is it's a great equalizer. All the PR machinery, the spin, the stories, the press releases don't matter because investors then look at real value, and it is a challenge for all promoters to hold up to. I'm sure many of them will, and so will Paytm eventually. So with that, I want to thank all of you for joining us on this fantastic discussion on the show.